The European Commission has lowered growth predictions and signalled the persistence of inflation for the medium to long term. According to the EU, the Bloc's economy will expand by just 0.8% this year and 1.4% next year. That's a downgrade from prediction of 1% growth this year and 1.7% next year. Looking more closely, the new figures predict a contraction in German real gross domestic product of 0.4% compared with a previously forecast rise of 0.2%. Paolo Gentiloni, the European Commissioner for the Economy, said when the largest economy of the Union is in slightly negative growth, this will be affecting everybody else. So let's try and learn more and bring in Jamil Ahmed. He is Chief Analyst at online trading brokerage GTC. Thank you very much for joining us. Right, Jamil, what's happening to Germany, first of all? And is China and the trade relation with China having a big impact on this slowdown?
Yes, Germany essentially, Ludovica, is stuck between a rock and a hard place. And we've said the exact same for Europe as a whole, because we have the slowing global growth fears, which means the inflationary pressures and the higher interest rate policy from the European Central Bank are not supporting EU economic growth. At the same point, Germany, as the major manufacturing powerhouse of Europe, is going to face another issue from slowing demand from China. As we know, the Chinese economy is only just returning back from protracted lockdowns, and it's going to take quite some time for that car to get moving again. And essentially what we see here is that there's more and more expectations that the European Central Bank have done as much as they possibly can in terms of lifting interest rates. And for as long as inflationary pressures remain strong and global concerns remain rampant, which is the case, Germany and the European Central Bank, the European economy will remain between the rock and the hard place.
Right, a lot of cloudiness and pessimism then on Germany itself. So, Jamil, the EU growth revision comes as the ECB prepares for a pivotal decision on Thursday on whether to raise those rates to contain high inflation in Europe. What do you expect from that meeting?
I think the European Central Bank are going to leave monetary policy unchanged, and that will be the accompanying statement as well. Essentially, the European Central Bank have lifted interest rates as far as they can. And the catch-22 here is that this is presenting negative ramifications on EU economic momentum, because clearly businesses and investments do struggle from higher interest rates. At the same point, we've certainly seen a recent shift higher in oil prices, and it looks like inflationary pressures for Europe, like the United Kingdom, will remain high for the rest of 2023. So there's not much that the ECB can do about this situation, other than to leave policy unchanged and hope that this helps EU economic growth late in 2023. But generally stating here, the higher interest rate policy is the opposite of what the European economy needs right now.
We'll be following that meeting on Thursday very closely. Jamil Ahmed, thank you very much. And now let's go to other top stories from around the world. The UK's labour market has showed more signs of cooling, prompting some investors to cut their bets on further interest rate hikes by the Bank of England. The jobless rate rose to 4.3% in the 3 months to July from 4.2% a month earlier. But annual growth in average pay remained at 7.8%. That's the highest rate since records began more than 2 decades ago. China's largest private property developer, Country Garden, has reportedly won approval from creditors to extend repayment on 6 yuan bonds by 3 years. This came just a week after the embattled company made a last-minute coupon payment to avoid a default on dollar securities. Shares in Country Garden rose as much as 10% after the report. And Qualcomm has signed a deal with Apple to supply 5G modem chips until 2026. The deal is an extension of a relationship to continue supplying chips that began in 2019 after the iPhone maker faced challenges in China and other supply chain problems. Qualcomm shares were up 4%, with Apple's shares also increasing by 0.4%. The deal comes with the launch of the new iPhone 15 on Tuesday.